Hello, welcome back to Learn Economy. In this video, we are going to look at the objective factors affecting consumption. First, coming to the case of income, we have understood that the consumption function shows the relationship between income and consumption. The influence of income upon consumption is looked into when we take consumption function into consideration. From the very consumption function, when the very concept of consumption function itself, we could understand that income is an important factor which influences consumption. So, income is by far the most important factor which is considered to influence the propensity to consume of a community. As the income of a community rises or falls, consumption spending also has got its influence or implications. That too would rise or fall, which depends upon whether the income is rising or whether the income is falling. So, changes in consumption caused by an increase in income and changes in consumption caused by an increase in propensity to consume should be very much important to understand. Next is distribution of income. Not the very income itself, but also the distribution of the same would influence the consumption function of a community. So, how much will be spent for consumption out of a given income of the community is the way in which income is distributed. There is great inequality in the distribution of income in the modern capitalist economies, and the result is that rich find it very much easy to save, whereas for poor it would be very much difficult to save. This widespread inequality of income lowers the overall propensity to consume, as the rich have already fulfilled most of their basic wants, and a more equal distribution of wealth will give rise to propensity to consume. This would increase the propensity to consume. Definitely, the proportion of consumption will vary, but it is very much important to take into consideration the psychological law of consumption, which says that with the increase in your income, your consumption will definitely increase, but the proportion of the increase in consumption will be lower than the increase in your income. That is very much important to note. Then we have to understand the financial policies of corporation, the influence of the same in determining your consumption. The policies of joint stock companies and corporation with respect to dividend payments and investment also affect consumption, that too in diverse manners. If corporation and companies keep more reserves and distribute less of their profits as dividend, then this will lower the disposable income of the consumers. And on the other hand, you can see if they are distributing more in the form of dividends, that will lead to increase in the disposable income of the consumers, which will in turn would be reflected upon the consumption pattern of the consumer, because if they have more disposable income with them, that will lead to increase in the consumption of the consumers. Next, changes in expectation. Expectation of the people regarding future events plays a very important role in influencing the propensity to consume. Individual would rush to purchase goods much in excess of their current needs if they expect a war or if they fear a shortage in the future. Then they would buy more today. Thus, the amount of consumption as a ratio of current income will rise and consumption function will shift upwards. Here we are referring to consumption function of today, because they are expecting a rise in the price of food, or they are expecting a scarcity of food in the future. As a result, they are consuming more today. So as a result, for today the consumption function would shift upwards. Then windfall gains or losses. This is a sudden or unexpected gain or loss. As a result, this would influence your income. There would be a rise or fall in your income that will happen all of a sudden, and this will have implication upon your consumption accordingly. It is believed that the well-to-do increase in the consumption above the normal level will result in more consumption. This is as a result of the windfall gains. And in the late 20s and all, there were huge windfall gains on the account of the boom condition in the American economy. And as a result of the same, the consumption function shifted upwards. That means that there was an increase in the consumption. Keynes gave specific recognition to the possibility that consumption spending might be influenced not only by income but also by capital gains. Then the influence of fiscal policy. We know that it is fiscal policy is the policies taken by the central government of an economy which mainly pertain to the arena of taxation and public expenditure. And these changes have significant effects upon the consumption function of the economy. The government's fiscal policy resulting in high progressive tax system bring about more equitable distribution of income. This would shift the consumption function upwards. That means that there will be an increase in the consumption. So, on the other hand, a regressive tax structure will reduce the consumption in the economy. Next, we have terms of credit on consumer durables. Terms of credit, especially relating to consumer durables like electronic gadgets, machines, radios, scooters, cars, vehicles. This constitutes a very important aspect when you look into the influence of these on consumption expenditure. Recently, it's very important to see that in advanced economies on all, especially not only in advanced economies but also in developing economies like India, there have been a considerable increase in the volume of purchase of consumer durables. This is financed by the consumer credit. Besides the rate of interest, size of down payments, length of the periods during which the balances must be paid, these are certain important factors which would affect the consumer expenditure. Next, we have wages and propensity to consume. We know that wages form your income, right? Classical economists laid stress on the stimulating effect of wage cut on propensity to consume. Their argument was that a general reduction in wages will result in general reduction in prices. We have seen that how they are arguing for the wage price flexibility, creating balances in the economy, how it solves problem in the economy and all. And as per them, the lower the prices will increase consumption. That means that this is a kind of demand price relationship. When the prices are less, that will increase your demand, right? But such an approach represented a vague attempt to apply certain principles relating to price and demand for particular products to the problem of total consumption. Actually, the effects of wage cuts are likely to be unfavorable to the propensity to consume, because if there is a cut in your wage, that means that there is a reduction in your income. As a result, you will be forced to spend less. When wages are cut while incomes of the other groups like renters, businessmen remains the same, the profit-wage relationship would be upset. When wages fall, profit and rent will continue to increase relatively. As a result, the propensity to consume of the workers would be adversely affected if there is a cut in their wages, and that this would reduce their purchasing power. So, it is very much important to understand the influence of wage cut upon consumption. If the general cut in money wage is expected to be repeated indefinitely, consumers will tend to withhold their demand in anticipation of a further fall in prices. Thereby, this will shift the saving function upwards and depress the consumption function. So there is a downward shift in the consumption function because they are expecting a fall in the prices in the future. It is held that many wage cuts by redistributing income in favor of the groups with lower marginal propensity to consume will cause income and output as also employment to decline. Now, the influence of wealth and stock of money should also be dealt with if you are looking into the determinants of your consumption. The total wealth position of consumer has been thought to be a significant factor which influences the consumer spending. Wealth has been analyzed most thoroughly and tested most extensively as a determinant of consumption. A consumption function with wealth assets as one of the important influences has been proposed by Montecullani and many others as well. For wealth may be used to balance income streams over long periods of time. It is lifetime resources which is available to the consumer rather than the volume of income over the short period that matters. Such a formulation of consumer behavior is usually known as the life cycle hypothesis. We will be doing a separate video on this aspect. This is a very important theory when you take into consideration the consumption function. So they pose a consumption function. I mean, when we are considering this life cycle hypothesis, it's important to understand that individual consumption depends on the resources available to the individual, rate of return on capital, age of the consumer, etc. Available resources are defined as existing net worth plus present value of all the current and future non-property earnings should be considered here. As per this Modigliani approach, I mean, or the life cycle hypothesis approach, the rational consumer considers all his existing resources when planning for his consumption. What is important to realize in this situation is the inclusion of wealth significantly improve the explanation of consumer behavior. How much wealth a person holds will definitely influence his consumption pattern. But the functional relationship that consumption depends on income and wealth both gives rise to patterns of consumer behavior which is already established and compatible with the uh, real life situations. As such, wealth effect would probably be applicable to any change in consumer money holding if such changes were not offset by equivalent changes in other wealth. Mere liquidity increase will stimulate consumption directly. That means that if you have more liquid cash in your hand, this will stimulate your consumption. So with that, we are moving to the role of liquid asset consumption and Pigou effect. Just understand that liquid assets are those assets which could be easily converted into money. It has been seen that when people have large amount of liquid assets, they will show a more tendency to spend more in consumption. And this is especially true where these kinds of assets are more evenly distributed over various income groups. It is clear that more liquid assets people have, the greater will be the rate of consumption. Professor Pigou has argued that a general fall in prices which is induced by a general wage cut, would increase the real value of cash balances and other forms of saving, thereby leading to a higher rate of consumption. This is known as this relationship has come to be known as a Pigou effect. And Pigou effect means that the real value of money assets would increase as a result of wage cuts and prices. The rise in the real value of money assets would shift the consumption function upwards, which is known as the real value of money assets effect. But the validity of Pigou effect has been questioned by many modern economists, partly on the basis that a large number of persons do not possess money assets, and partly on the ground that those who possess such kind of assets want to possess still more. Under such kind of circumstances, it's highly doubtful whether the propensity to consume would be increased if there is some Pigou effect. Although some research workers have found that liquid asset holdings are not that significant in influencing consumption function, other econometricians have estimated consumption functions that do certain significant liquid asset influences. That has got, okay. Now, just take into consideration the role of interest rate. Changes in the rate of interest may alter the propensity to consume. And if you see that if the interest rate goes up, people will consume less and save more, not to gain, because if you put cash in the bank, you will be gaining more interest because the rate of interest in the economy is high. On the other hand, people will consume more and save less if there is a fall in the rate of interest, and if you put money in the bank, you will be gaining less. So why should you put money in your bank and you suffer? So in order to deal with these kind of things, people will act in such a manner that they will increase or reduce their consumption by taking into consideration the rate of interest in the economy. However, we have to understand the case regarding the effect of interest rate changes on saving as a complex and uncertain phenomenon. And however, the rate of interest makes itself felt the greatest in the purchase of consumer durables, which are bought on installment basis, or rise in the interest rate makes installment buying more expensive, thereby discouraging consumption. So it is very important to understand that the objective factors which are induced by the unusual events such as war, strikes, flood, earthquake, revolution, change in tax structure. So this will play a very important role in influencing your consumption. The determination of aggregate consumption spending is a much more complicated matter, which has influence or which has made many economists put their heads into this. The relationship does not simplify relate current income to consumption. Rather, it involves some complex average of the past and expected income and consumption spend. Just look into the psychological factors. This is actually the subjective factors which influence your consumption. These are non-quantifiable factors like your quantitative factors or objective factors. These elements do not change significantly in the short run, despite these subjective or cultural factors are very much capable of changing and shaping your consumption function. Of all these factors, expectations, attitudes, etc., play a very important role. Rational behavior suggests that a consumer who expects a rise in the income or in the price level may consume more than the person who expects there is no such change in the future. So that's all. I welcome you to my Telegram group and Telegram channel to discuss your doubts, and please like, share, and subscribe to this channel for more videos. Thank you.